Hey guys, William from socialrealty.com. We just finished up with a Facebook Live, and I don't think it's saved, so I'm gonna reshoot the basics of the video so we can save it to the YouTube channel and Facebook and all that, so that if anybody didn't have a chance to watch it, they'll be able to go back and watch it now. So today we are over at the Hoarder House. So we bought this, I'm going to say about 5 months ago, and the weather has just gotten good enough now where we can actually get inside of it and start to make some assessments, frankly. We bought it for all purposes, sight unseen. There was so much garbage in the house that you couldn't even get around. I only just went in the foundation today and saw what it looked like down there, and I was very pleasantly surprised. We have taken so far 6 of those trailers to the dump. We've got plastics to be recycled, metals to be recycled, and then I'll walk out towards the back a little bit and show you our cardboard and wood pile, because all of that we can recycle on site. We'll run it through a shredder and turn it to wood pulp, but all of that back there is cardboard and pallets and wood and just garbage that we found. We have not even opened up the 2 pole barns yet. We've just been struggling to get the house empty so we could get a game plan together and figure out what we wanted to do with it. When we buy properties for either ourselves or our clients, the first and most obvious question is something that we call highest and best use. What is the property best suited for that is going to bring the greatest amount of return? In the case of this property, it could have been a group home, it could be a daycare center, it could be a single family house, it could be knocked down and a brand new house built here. This is 5+ acres and abuts other farm and agricultural land. Its highest and best use in certain times might have been for corn. So we took a look at the numbers, and we're pretty confident that its highest and best use is going to be as a duplex. And the reason we came to that decision is it's over 3,000 square feet. It is a cobble job inside, but after seeing the basement, it's actually got a brand new 90% furnace in it, along with beautiful foundation walls. It's in great shape down there. Somebody actually paid to have the foundation reinforced all the way around. So it's kind of the old adage, it's got good bones, we're gonna save them. It's just really ugly. So we treat all of our properties as if they're a stock. I have numerous calls with clients where I explain to them, you've got to take your personal opinions about the property and your emotional out of it. This is not somewhere you are ever going to live. It doesn't matter if you like the color of the countertops. It doesn't matter if you like the color of the paint. What matters is how much is your capital expenditure, your purchase plus repair costs, how much are your taxes, what are your likely repair bills, what is the local municipality like when it comes to rentals. Do they secretly want to run them out so they will find a reason to ticket you at every turn, or is it a more rural area where nobody really hassles you? You have to factor all of these things in when you're making a decision. It's essentially a stock. This was $100,000. $50,000 is our rehab budget on it. That's going to get us a brand new roof, 2 new kitchens, 2 new bathrooms, all new drywall, all new insulation, all new windows. We might even have enough to side this thing. So we will effectively end up with a house that has a minimum 5 years before it needs any real repair work. And I say that short a time frame because I've been doing this for 15 years, and it's safe to say tenants wear things out 3 times faster than a normal homeowner would. But even at that, no major maintenance cost for 5 years with a $150,000 capital investment is pretty phenomenal. This house is located in an area where rentals are in high demand. With COVID, there was a lot of question of what was going to happen. Are rentals going to go down? Is it going to be another foreclosure crisis? I know it hasn't been very long, but I can with very good confidence say the opposite of what we expected is what is starting to happen. What we've found so far is people are fleeing the apartment buildings. We put 3 properties up for rent in the last month. In a normal market, we would have 6 to 10 people over the course of a week look at it, which is brisk. I had a rural property go up at the end of April. I had 35 people come to it at one showing. We just had a property in Clinton Township become available. It had about 15 people the first weekend. It had almost 40 the second weekend and is now gone. Every property we're listing, we're upping the rent anywhere from $100 to $300, and they're renting in 1 week's time. And the story we're getting every single time is they were in an apartment or they were in some kind of a densely packed situation and they're looking for more space. The other sadder thing we're finding is couples who are together and they've decided they need some time apart. We are seeing quite a bit of that. So this is going to end up being 2 units. Both are going to be 1,500 square feet, 3 bedrooms, 1 bathroom. On our spreadsheets, when we did the calculations on it, we figured $1,300 aside. So the numbers I'm going to give you are based on $1,300 aside. I think it's going to go for $1,500 aside. I think we're going to get 15 out of the side that faces the farmland, and I bet we get 1,600 out of the side that faces the lake because it's got a premium view, and people will pay for a better view. So this property, with $150,000 invested, will gross $26,000 a month. That's $31,200 a year. I understand people who want to try and manage their rental properties on their own. I commend it. If you want to do that, we're more than happy to set you up with rental property and set you loose. Generally what happens is 4 to 6 months later, the owner is sick and tired of wasting their Saturdays fixing everything for their tenants, and they want me to take care of it again. We charge less than anybody else in the area. We're only 8% for management, $500 flat fee move-ins. Most management companies are going to take your entire first month's rent. We only take $500. I cannot remember the last time I had to cooperate with another broker to tenant a house. We tenant 99.9% of our houses in-house, so we don't have to split commissions with anybody. Assuming we're managing this property, that means we'll earn $2,496 in commissions. On a $31,000 gross, it's really not that bad. The property taxes are $1,600 a year non-homestead. I'm going to do a video very shortly on the difference between homestead and non-homestead and why it matters. Then we have, I always tell people to budget for repairs. There's things happen, budget for it every year. You won't use it every year, but if you budget for it and you leave a little nest egg when you do need a hot water tank, or a tree branch from a tree falls through a roof, you have the means to take care of it and it doesn't hurt your portfolio. So on this, I'd say $1,000 for the building for the year. So if you take your gross, take off your management fees, your taxes, your operating costs, remember we're going to do this so that the meters for the gas and the electric are separate. The landowner is going to pay no utility bills on this. The tenants are going to cover everything. You're going to net $25,600 a year. So when you divide that by your capital investment to get your ROI, or your return on your income, you're looking at a 17% income. This is on the upper level. They're not all like this. Most are in the 8 to 12% range. Our target is 10 to 12%. If we're going to get a good 10% return out of it, we highly encourage our clients to do it. Because a consistent 10% return blows away anything else you're going to do with mutual funds, stocks, bonds. None of those are paying 10% a year, and I guarantee you none of them are paying 10% consistently over 5, 7, 10 years. Yes, everybody's got the story of their buddy who bought into Tesla at 100 and now it's at 850. Those people made a ton of money. But the people who are buying it now for $850 are probably going to lose their butts at some point. I went back and took a look at just 2 random name brand stocks. If you were looking at buying Target, today it's trading at $120 a share. One of the reasons I like properties like this so much is you own it. It is yours. If you want to sell it, if you want to rent it, if you want to treat it as a flip and sell it down the line, it's yours. Do what you want with it. You can take a loan on it, still have positive cash flow, and generate cash if you're ever in a car accident or God forbid somebody gets sick. You can't really do that with your stocks. If you need to sell your stocks today, let's say a pandemic hits and you've lost your job and you need to free up that capital. Well, odds are everybody else needs to free up their capital too, and the value of your stocks has gone down. This is still paying every single month. So Target 1 year ago was trading at $103 a share, and today it's trading at $120. That was actually the biggest increase I could find from last year to this year for any of the stocks. You would have made $21,000 in 1 year. But if you'd have bought 2 years before, you would have lost half your investment because it was trading at almost $200. You also would only own 0.00002% of the company. That's statistically zero. If you were to buy into Ford a year ago, you would have bought at $10 a share. Ford has 506 million shares outstanding. You would have owned 0.00007% of the company on a $150,000 investment. Today it's trading at $5.25 as of about 4 o'clock. So that means you would have lost almost $75,000 on Ford. And again, you have no control over how any of it goes down. So this is the reason we really like real estate. It's kind of, there's this old book, which I would actually recommend for anybody out there who's a nerd and interested in this, called Rich Dad, Poor Dad. And it is something where they go over why the families and generations that have money continue to have money. And one of the things you'll find is it has to do with how they invest their money. Rockefellers are not dumping all of their money into Tesla stock. They bought buildings, they bought property, and rather than sell it when the market went up or down, they've been cash flowing them for generations. And that's what my family intends to do. We're building out a portfolio for ourselves that we can pass on to our children. It will give them options in life, and we're doing that for a number of other clients as well. I think our largest client is 138 homes. Up until recently, my largest client was 300 and some homes. And we actually just sold his portfolio and broke it up, and we still have the management on all of them. So this is the hoarder house. Since this video's already getting to being like 13 minutes long, we'll end this one. I'll shoot a quick walkthrough video of this and we'll post it in a separate video. If you guys have any questions about real estate investing, selling your own home, contracting, we own a property management company, a retail brokerage with 2 offices and a third coming, as well as a contracting company. So we do it all. I'm very happy to help. It's one of my favorite things to do. Get a hold of me on my cell phone, call the office, or check us out at socialrealty.com, or send me a message through Instant Messenger, because I recently have found out why people love Facebook so much. All right, if you have any questions, let me know, and I appreciate you taking the time to watch this video.